Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, November the 29th. The year is 2023. Let's talk trading. Noise. These videos are for educational purposes only. Your results may differ from mine. Now, I believe sometime in the past, over the thousands of videos that I've made, I think I've talked about noise at least once. And a trader was talking about in a reply that they're trading M1, M5, and that it was noise or something to that effect. Well, first, let's start off with defining noise. I looked it up, and for our purposes, noise could be defined as irregular fluctuations that accompany a transmitted electrical signal but are not part of it or tend to obscure it. So, for trading, irregular fluctuations, that's what the market does. I mean, it goes up, it goes down, it goes down, it goes up. That's what it does constantly. And what I've been telling people for over a decade, maybe more by now, that there's only one true chart, and that's the one tick chart. And everything else is data compression, because what happens is you pick a arbitrary amount of time or amount of ticks, and you say it started here, it went this high, then it went that low, or it went that low, and it went this high, and it closed here. That's all data compression, because you could be turning anywhere from one or more actual ticks into a single candle or bar. And, see, it's that simple. So if price is at a level on the 1 minute chart, it's going to be at the same level on a 1 month chart, 1 year chart, and everything in between. Okay? And it just, I guess it kind of bothers me in the sense that when people are out there and they're saying these things and they're speaking from a position of authority that they may have granted themselves. I mean, you could accuse me of that, but I don't say I'm an authority. I'm just a trader, and I just try to cut through the BS, the crap, and determine what is, the reality of the situation, and not use a bunch of fancy formulas or terms to obscure things. I try to make things simple. And I try to dispel myths and garbage that's put out there. Because usually these people have ulterior motives. I mean, you think about it, the market exists to extract money from you. It doesn't exist so you can extract money from it. Because as soon as you put the trade on, there's somebody out there, wanting you to lose so they can win. So, this whole idea about noise usually comes from people that trade. There might be swing traders or something. Oh, anything below H1 is noise, blah, blah, blah. Well, no, actually, that's ridiculous. And I say it real simply. You can say the 1 hour chart's made up of 61 minute charts. Well, if you take noise and you add it to more noise and to more noise, isn't that just going to be even more noise? I mean, it's just funny. I mean, you would need the opposite signal to cancel it out. That's why they have those noise canceling headphones out there. to they hear something that your ear would consider noise, and it does the opposite frequency at the same time to cancel it out, flatten it out, zero it out. So I hope that helps that one trader and any other traders who still might be holding on to that belief that anything below a certain time frame is noise. I mean, on the other hand, I guess you could say, well, if they're looking at the monthly chart, they don't really care what happens on a 1 minute or a 60-minute or a 1 day or maybe even a 1 week chart for that matter. They're just looking at a much bigger picture, and the rest of it, those fluctuations, that's just noise. So what if it moves 500 pips? I'm looking for 3,000 pip moves or whatever monthly traders look for. So I guess, one man's noise is another, or one trader's noise is another trader's treasure. So I think that sums it up. And just one other little reminder here, we're coming up to the end of the month. Risk management, always have it in place. Don't lose any more in any one single trade than you are willing to lose. Let's run through the charts. We haven't done that in a while. Walmall and I, we get to talking about different topics because, you see, as I mentioned yesterday in the crucial mistakes, it's more about you than it is about the charts. So we're looking here at the monthly chart, and we can see we're 549 pips above that monthly open. 38 off the high, 600 off the low. So, from here to here, there was definitely some gyrations, right? And we look at it on a weekly basis. So let's see, I think this was the first week of the month. You can see here we went down, and we've gone up the past 3 weeks. We've missed those weekly pivots too for 2 times in a row. And it looks like all the gaps have filled across the pairs. And we'll drop down to the daily. And you can see here from the month looks like it went up and then it went down. It's like we've pretty much been steady up from the month. This first day here, we put in that opening range and it never came back. You can see here on the weekly opening range yesterday, we popped through it in the launch pad and we haven't come back yet. And looks like we're turning this candle red right now by 3 pips. We're below the daily open here, which was 26.94.7 on my chart. And we look at the year, we crossed that yearly midpoint there at 24.7, let's call it 24.72. We are 605 pips above the yearly open, 448 off the high, 892 off the low. And you can see that this month we came back down. We just about touched that yearly open. We had a low of 1.20951. So it looks like we missed it by about 6 pips. And then we shot back up. And inside bar traders, we had a weekly inside bar 13 weeks ago. We're back into that area. We had a daily inside bar 10 days ago, and we broke out of that range. And we broke out of that monthly inside bar from 9 months ago. Put this right here, you can see we came right through it this month. So once again, those horizontal lines, can prove to be profitable if you trade them properly. And it looks like we've got some inside bar action, a lot on the monthly. Today's range on the pound's only 68 pips, but the pound New Zealand is 216. I wonder why. What's going on with New Zealand? New Zealand US dollars only 78. Okay, Euro New Zealand's 197. Australian New Zealand's 115. So something's going on with the New Zealand dollar. And looks like we just turned the day green again. So you can see here we're crisscrossing that daily open. I believe we had some news and we just turned it red again. So this is where some people say, you see, if you take these trades, you get chopped up. Not if you take your 1 or 2 pips, you don't. And, you know, some people go, oh, that's, you know, you're just making the brokers rich turning trades like that. Well, you know, if you're putting a pip or 2 in your pocket each time and you do that 10, 20 times a day, you know, depending on the size you're trading, you can walk away with some real folding money. Just have to be quick and not be greedy. Now, I guess the other trader, you know, back to Noise, was talking about, you know, getting out of a trade too early. That's hindsight. Unless, you know, your method said, you know what, I'm going to trade from horizontal line to horizontal line, or I'm going to trade until, you know, the next candle turns red. Whatever you do, if you stick to your plan, you're not getting out too early. The only way you get out too early is when you don't stick to your plan. I mean, that's it. I mean, if your plan says to take 2 pips, you take 2 pips and it runs another 20, you didn't get out too early. You stuck to your plan. Now, if that happens to you more often than not, maybe you need to adjust your plan. But be careful, because if your plan's based on statistics, you know those 2 pips might happen 90% of the time. But you have to see how often do those 20 pips happen. So don't tell yourself these things when they're really not true. Make sure you tell yourself, you know, facts. So just keep that in mind the next time you see trades run, because hey, you know what happens to me a lot. It's like, dang it, but you know, based on how I trade, what I do, I did what I do. I walked away with money. So it's, Walmart would say, hey, you have more money in the bank than you started with? Yes. Okay, then pretty much just, you know, shut up. You know, so what if they brought out another, you know, big pot of shrimp? You already left the line. You're done. And that's just how it is. Looks like the green rats had a chance to feast. And you can see right here, you could have made 10 pips. But if you wanted to try for the 20, well, guess what? You've given back about half of them right now. So you could say, well, I got out too late. Once again, that's hindsight. Only time you get out too late is when you didn't follow your plan. For some reason, you didn't get out when your plan told you to. That's simple. It's that simple. So, fellow traders, that's just about it for the day. We can see here those missed pivots. So we got some H4 pivots that looks like they need to get taken out sooner or later. In and out of that upper wick zone. We didn't even hit the ATR zone today. So really think about the noise and getting out too early, too late. Really focus on that, and really when you speak to yourself, internal talk, or even if you say it out loud, make sure it's factual. You know, question those assumptions, question your language, because if you tell yourself wrong stuff, then you know you're going to head down the wrong path. So remember, and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.